Good morning,
Hey,
everybody. That was good, wasn't it,
morning.
Steve? Good
That's
morning.
really
I'm
exciting.
Joe Neighbour from Signal Centre, joined by Steve O'Hare for a new look talking ball. How you doing, Steve?
Very well, thanks. Very well.
Jamie, our young chap that's working with us, has done a very nice job of that, I think.
Yeah, looks brilliant. Yeah, looks very professional.
Yes, got some tags floating across the top of the screen as well. So make sure you join us on the socials if you're new here, or if you've been with us a while, then you should be following us already. Hopefully,
Yeah,
that's the plan.
nice. Yeah,
Hopefully, you're getting some value from this.
well,
Um, yeah, we'll see. Anyway, Steve, did you have a good weekend?
yeah, lovely weekend, mate. Yeah, yeah, not too
Good.
bad.
Okay, let's
Uh,
get stuck into the latest headlines then, shall we? Obviously, the Ukraine-Russia situation continues to dominate. There was no headway in the peace talks, no positive developments surrounding the Ukraine conflict during the weekend. Further devastation of one of the cities of Mariupol has continued, with further accusations of war crimes, while the Ukraine has rejected calls to surrender the city. There's not been any headway in the peace talks, while US President Biden warned China over the consequences of providing material support for Russia. In terms of what's going on with the US Federal Reserve at the moment, they continued to produce a hawkish rhetoric with regards to monetary policy. The economic data, according to one Fed governor, is screaming for a 50 basis point rate increase, although geopolitical concerns demand caution. Fed Governor Waller said that the bank should tighten more aggressively to get in front of rising inflation. Later today, we've got Fed Chair Jerome Powell at a meeting, and his comments will be watched very closely following last week's Fed policy meeting and the hawkish rhetoric from some Fed officials. So markets will be monitoring comments from the Fed chair very closely today. He's due to deliver a speech with the comments passed closely to assess whether he wants to signal a stronger possibility of more aggressive rate hikes. Over the weekend as well, we've seen further increase in oil prices. They've continued to move higher amid underlying concerns over supply shortages, especially with strong pressure for Russian crude to be shunned. That's pretty much it on the headline front. So, Steve, I think that produces a nice little segue for us to move into some charts. What do you think we should start with today?
yeah, I'm happy to start with oil. As we're talking about it, obviously, we've got. Let's take a look at the daily chart on oil. And we can see this correction from the move to the multi-year highs. We got up to a high of 126.30 in WTI crude oil, and we got up to a high of 131.06 in Brent. So yeah, we've had the correction from there, but this correction looks to have stalled, forming a morning doji star formation, and we're projecting higher from that as well. We can see that we formed a bit of a double bottom here, broke the neckline and projected nicely higher. Still looks to be further potential on the upside. We expect in the WTI crude oil to find resistance between, I suppose we'd best to put a range on it between 114, 115, and obviously at the multi-year highs coming in at 126.60. On a more short-term basis, we can take a look at maybe an hourly chart, and we can see we're back up to resistance we found on the 11th of March, 107.67 and maybe 111.77, providing that resistance. We're through the 38.2% Fibonacci retracement level, which came in at 105.27. Next big one for us is 113.30. So still remains positive upside on the oil side of things, as Joe said, based on the crisis in Ukraine, Russia at the moment. The other market that is impacted by this type of crisis is gold. We can see that we've basically stalled. If we go back to what was going on the 8th of March, we stalled just in front of the all-time high at 2070. 2075 is the all-time high. We stalled $5 in front of it, corrected lower from there, and we're still in this correction. This is a daily chart, and we got down to a low of 18.95, just below $1,900, and posted a bullish hammer, reacted from here. However, Friday's price action was a bearish engulfing candle, and we can see that we potentially had this head and shoulders formation we talked about from the gun to head challenge. I was looking to sell this resistance. Really, the main resistance for me is up at 1960. Below there we've got 1950. And we've stalled here at 1918 and just looking really for the next move where we're going to get that on a short-term basis. For me, it's I'm really sort of looking at, I've been looking at this for the gun to head trade idea for over the last week, and it's paid off quite nicely. Support coming in as we see here 1918, but really maybe needs a retest of this 1895 level, which is where we got down to before the reverse. But we may have already formed a higher low, so watch out for the price action today. Really, that'll be guided by anything coming out of Russia, Ukraine, or dollar strength weakness. Moving on to cryptos, Bitcoin seems to be defying logic as per usual and holding it up. We look at the weekly chart, we can see where price action has been over the last month or so. We don't seem to have been able to get away from this 39,000 level. We pushed a bit higher last week, managed to get up to 42,405, but that was still short of the previous week's high, and then pulled back from there. So on a short-term basis, the previous week's high of 42,591 will provide resistance. A breaker there, we might see a few stops and a little bit of a momentum up. 45,500 to 46,000 for me is the key resistance. Really needs to sort of push above there aggressively and close above there on a daily or weekly basis for me to change my mind on the bearish outlook on Bitcoin. And finally, we look at indices, and nice turnaround in FTSE. We had the sell-off. We got down to this 68.10 support. It stalled just below there and then reversed sharply. This is on a weekly time frame. Let's take a look at how the daily picture has looked, and this reaction higher in a nice three-way correction, and looking to target the resistance, which is nearby 74.66, and above there 75.71. Dips continue to be bought. You can see these higher lows that are forming. Still looks quite healthy on this side of things, and obviously oil prices will be impacting on FTSE. That benefits from rising oil prices or the profits from oil stocks. So that's still looking pretty good. On the DAX side of things, again, similar sort of correction. We had, I think we had some sort of double, well, actually it's like a inverse head and shoulders formation formed, and that projects a move up towards the 15,500 level, although we are struggling at the moment. Retested the neckline, so potential for further upside, and yeah, although we do have this other trend line, downward trending resistance coming in somewhere in between at 14,800. Trading at 14,400. Really nice start this morning. On the 4-hour chart, a bullish outside candle has just formed. It forms in 1 minute time. So that's potentially a positive thing for the DAX. On the Dow, we had a very positive week last week, a bullish engulfing candle which took out the previous month's worth of sell-off. So finished on the highs at 34,813. We've pulled back from there at the start of this week, but I firmly expect dip buying to come into the fore on the Dow as well. Again, we can see it, these really positive candles over the last month, and dips continue to be bought. Potentially looking at around about 34,500 as the sort of like maybe first test of buying support. See if we're continuing through. The ranges in the Dow now still elevated around about 700 points a day. So volatility remains within them indices, the Dow Industrials. Nasdaq has performed really well as well last week. It's a bullish outside candle looking at this chart, that's even more impressive than the Dow candle. And we've stalled around about previous support, which should turn into resistance now, 14,455. Looking at this here, again, the momentum seems really with the indices at the moment, and it'll be a brave man to stand in front of this. S&P's also, I've been looking at this potential for a head and shoulders formation, maybe looking for the right shoulder now during this rally, but again, on a weekly chart, a bullish outside week potentially signals further upside. Resistance coming in for me at 46,000 in the S&P before the attempt higher at 4,817, which is the all-time high. Until then, though, we'll have to see how things play out. China 50 formed a really aggressive-looking bullish hammer, recovering from the previous, last week's sell-off, basically, which got down to 12,288. Looking at really to sort of target resistance, 14,500 is that level I've been talking about for months. That's about it on that sort of things. I can hand over to you on the FX, Joe.
Thank you. Okay, let's start off with the dollar index then. So still trading in a bullish channel, as we can see here. Price action, however, over the last couple of weeks has been a little bit choppy as we kind of look for some sort of consolidation, I suppose. We are still holding above this support here at 97.72. So while that remains the case, I think there is potential for the buyers again to step back in and to push prices higher. Still looking for a target of 100 to be hit at some point in the coming weeks and months. Looking at euro US dollar, it's a very similar situation, but in reverse. We can see we had this move down to the lows down here, but we are now in the process of some sort of consolidation, it would seem. Still struggling to get above 111.21, and while that remains the case, I think the pressure still remains on the downside, and we can expect to see lower prices. Sterling on the back foot today. This is cable, as you can see from the breakdown that we saw below at 131.60. Prices have continued to be capped below that level. We saw this really long-legged doji here. The following day was backed up with a bit of gains, but today we are posting some losses. Probably one of the worst, if not the worst performing currency today in my watch list. Certainly not far away. So still looking for lower prices there, down towards this 50% Fibonacci retracement level at 128.46. Some of the Aussie currencies are on the back foot today. Aussie Swiss franc was one that we were looking at last week because it was challenging these key highs here from back in October last year. Posted a doji candle on Friday. There was actually my gun to the head trade, but it pretty much closed where it opened. Therefore, I didn't actually make anything on that. It was down ever so slightly on the day, but looks as though the selling is starting to pick up a bit of steam today. Just seen that pick up just in the last couple of seconds, actually down 0.36% on the session so far. If we look at Aussie versus Japanese yen, it's a different story. We broke through key resistance here at 85.80, and since then we really haven't looked back. This was the break that we saw on the 16th of March, and that was backed up by 3 consecutive days of buying. A little bit of stalling on that at the moment, but I think that would just be an opportunity to take some profit if anybody's been long on that breakout, and we may see some sort of retracement before it looks to maybe move again to the upside. Looking at euro versus the Aussie dollar, we saw this breakdown quite convincingly after a bit of a ski slope of a move lower, really. That's a really sharp move to the downside. We saw a nice retest of the newly formed resistance, and we've seen selling continue to take place there. No real change expected. Yes, we are up today, but that looks to be just a mild correction before probably the sellers step back in again on that one. Euro Swiss was an interesting one. On Friday, it posted a bearish engulfing candle, so we saw a correction higher, went above the resistance level at 103.26, but on the back foot again today following that selling that we saw on Friday. So it looks as though lower prices are set to continue there. If we look at euro versus the pound, we saw an engulfing candle form on Friday. We are seeing higher prices today, but it looks as though we're in for more chop with this. As you can see, price action has been quite sideways now for a number of weeks. And unless we can make a decisive break above this 84.47 level, then I think we are continuing to expect more range-bound price action with a bearish bias. Let's take a look at some of the New Zealand dollar currencies. The one that was particularly catching my eye was New Zealand dollar Japanese yen. As you can see, a really sharp move to the upside that's started back at the end of January and really hasn't abated since. We've seen this price move much higher into this resistance level now from the highs that we posted in October. So far on the session, we're posting a bit of a doji candle on this. So I'm thinking maybe there's an opportunity to fade this given how strong the gains have been. So that may be one that I take a look at for the gun to the head trade today. And finally, I wanted to look at US dollar, Canadian dollar, still moving higher in an upward trend, it would seem, and is coming very close to trend support. As you can see, there's been a number of touch points along the way here, and we're approaching that level again. So maybe an opportunity to look at buying the US dollar versus the Canadian dollar in the very short term. That wraps up my view on the currencies for the start of the week.
Nice one, Joe.
Okay, Steve, you're looking at some new sentiment there. Is there something you wanted to show us on that front?
I'm just really looking for a little bit of new sentiment, trying to get a little bit of an idea of, from that side of things, from that analysis side of things, what is looking quite hot at the moment. Just looking at the crude oil market alerts. I might do a little piece on this later. It seems to be the crude oil and the gold are in the headlines when it comes to new sentiment, obviously, at the moment. 3 days ago, we got an 80% market alert signal. Daily news sentiment is moving higher, and 80% of the last 10 currencies prices risen within 9 days. So that's playing out quite nicely. That came out when price was trading at 104.10, and we're a little bit higher than that now. Although in the last 24 hours, new sentiment has turned mildly bearish. But again, sometimes this works almost from a contrarian point of view. There might be some snippets of news that get picked up, which, although the new sentiment is bearish, may have a positive impact in price. So yeah, looking at that really. The only other one I saw was gold. I'm really looking at, I've moved the confidence scale up to above 80%. Obviously nickel, we won't talk about nickel too much. That seems like a complete disaster at the moment, but gold is producing these positive daily news sentiment, and yeah, looking at that as well, new sentiment here turning positive. Maybe looking at gold, it's stalling a little bit on this side of things. On the 1 hour chart, short term, it's stalling, and looks like it could have formed a higher low, and maybe there is potential for further upside. So that's the things I was looking at to sort of like see whether I should continue my anti-gold or opposing the gold rally at the moment. Maybe I've got to flip that. So yeah.
Okay, interesting insight there, Steve. Thank you. Let's take a quick look at our gun to the head trades from last week. So as I mentioned, I went short of Aussie Swiss franc and was 2 ticks offside at 9 o'clock. So a 0.05R loss on that one. But Steve, another win for you on gold, 1.13R booked in on Friday. Really good week for you, 5.6R higher on the week, trading oil and gold in both directions.
Yeah, yeah. I'm just looking at seem to have done okay selling gold, obviously over the last 3 or 4. Oh no, actually that was a buy gold on Thursday, wasn't it? So yeah, hasn't played out too bad. So maybe alternating these buy sells on gold might work for me. Yeah, I think I might do that, Joe. The new sentiment obviously is more positive. There's a nice little support here, 1918. If we get in at 1926, that leaves, like, with a $10 stop, you could easily be looking at targeting a move up towards the 1950, the 1965 level. So I think I'll go for that to start the week off. Keep the stop at $10, which would be a break of the current support, and targeting a move, maybe just a nice 2-to-1 risk reward today, a move back towards 1946. Yeah, that'll do, donkey.
Cool.
Getting long here.
Good luck with that. I'm going to take a look at New Zealand dollar versus the Japanese yen, and the reason being, this is the let me get up on the screen. This is the daily chart, and as we can see, it's had a really strong move to the upside, but into this resistance level, this previous high from the 21st of October. So far today, we're posting a candle which suggests a bit of indecision into this level. Naturally, any technical analysts out there will be looking at this level to potentially fade it, given how strong that move higher has been. So if we take a look at the intraday charts, just to try and finesse the entry a little bit. Okay, so this is what I was looking at. So, obviously we've got the big uptrend that we've seen here. I've got Fibonacci levels drawn on from the low that we posted in January to the most recent highs. We've got 38.2 somewhere around here at 79.74. So that seems to be that maybe a reasonable area to target. I'm going to have to sell it there now, which is at 82.18. Stop loss above the highs of today at 82.56. Targeting a move down to this level here, which is just in front of the 38.2 actually, at 80.24. So looking for 5R on that one today potentially.
Nice one.
So yes, decent couple of looking trades to start the week. Let's hope certainly we well, from your perspective, continue that nice winning run that you're on, and hopefully I can add to that as well.
Yeah, I'm trying to point you in the right direction, Joe, but
you can
you're
lead a
still
horse
way
to
ahead.
water, can't you?
Yeah, exactly. Yeah.
Okay, so data-wise today, as we mentioned earlier on the news and the headlines, we've got this Fed Chair Powell speech, which is due to start at 2 o'clock UK time. So obviously markets will be monitoring that closely to see what comes from it, and there could be some volatility as a result. Later on in the week, we've got the UK consumer prices. So latest read on inflation in the UK, that's out on the 23rd, so that'll be Wednesday. We also have the UK spring statement. There is a bit of chat that there'll be some easing measures on the fuel side of things with regards to taxes, but according to some of the commentary I've seen today, it's not likely to be enough at this point. On the 24th of March, so on Thursday, we've got the Swiss National Bank policy decision. That will be well watched. They've already mentioned that they may take some intervening action to address what's going on in the currency markets with the Swiss franc at the moment. And also on the 24th, we've got the latest German PMI index reading as well. So there's a few bits to keep us interested, of course, alongside the other headlines that we know are ongoing at the moment with regards to Ukraine and Russia, and of course the commodity prices as well. So unless you've got anything else to add, Steve, I think we
No,
can.
just wondering what do you think they'll do then, Swiss National Bank? Do you think it'll be intervention as in terms of what they did before?
I hope not.
That seemed to be a bit of a PR disaster last time, and a financial disaster.
I don't know what they'll do, if I'm totally honest. I mean, the currency is pretty weak. It's sort of close to the lowest level it's been since the sort of height of the pandemic in March on a sort of basket basis.
Yeah.
Yeah, I'm not sure.
When is that? Is that
Thursday?
Thursday. Okay. Yeah, don't trust them Swiss guys.
Neutral, my.
Yeah. Okay. Lovely.
We'll see.
We should finish off with our little signal center thing. I really like that. The sort of like the signal center little banner.
Oh, the outro.
Thing. Yeah, the outro, mate.
Okay.
I'll let you take it away.
Which one's the outro though?
Oh, I don't know. It was like the intro, but we do it at the end.
All right, we'll finish off with that then. Just the normal banner, the white one we did, yeah.
Yeah,
Right,
like that.
cool. All right.
All right, thanks, guys.
Yeah, have a great day. Thanks.
Cheers.